Hello friends, Smita here, and our today's topic is goods and services. This is a series of topics which we will learn right from the theory of GST till how to calculate the 3B reports, how to enter the invoices, how to find out the different reports based on GST in Tally. All these things we will learn in this series. So this is first topic on GST part 1. So let's start with GST theory. GST is goods and service tax. GST stands for goods and service tax. It is a indirect type of tax. We know there are two types of taxes, direct taxes and indirect taxes. Direct taxes are calculated or charged on the direct income, that is on salary of the person, and indirect taxes are on the goods and services those are sold. So it is an indirect type of tax. It is single tax on supply of goods and services. As of now, before GST it was introduced on 1st of July 2017 in India, except Jammu Kashmir. So before that, there were number of taxes, but now only one tax is applied on the goods or services those are sold. So that is why it is a single tax on supply of goods and services. It has merged most of the existing taxes into single system of taxation. Just now I have told that earlier there were many types of taxes. The taxes like VAT, say education says central excise, VAT, or service tax, all these taxes were charged on the supply of goods or services. So before GST, all those taxes were charged, but after the GST, means right from GST, that is from 1st of July 2017, all these taxes merged into a single tax, which is known as the GST, goods and service tax. So it is charged on supply of goods and services. GST or goods and service tax is charged on the outward supply, that is the goods or services those are sold. On sales, it is charged. It is one nation, one tax. Now this, what is one nation, one tax? Before the GST, the taxes, there were number of taxes which were charged on a single product or service. At the same time, the rate of the taxes, that is VAT and all, was different for different states in India. So the product having the product having VAT rate in Maharashtra was different as compared to the rate for that some similar product in Goa, or we can say in Gujarat, Karnataka, and all these things. But GST is a one nation, one tax. It means for the same product, the GST rate applied all will be same all over India. It is one nation, one tax. Application started on 1st of July 2017. Well, it was started on 1st of July 2017, except the state of Jammu and Kashmir. So for rest of India, it was started applying GST. Under GST, every taxable person is liable to pay tax on output sales and is entitled to get ITC, that is input tax credit, on the taxes paid on inputs, that is purchases. The meaning of this, under this GST law, GST process, every taxable person, each and every word is important in this sentence, every taxable person. So who is a taxable person, that we will learn one by one. Every taxable person is liable to pay tax. Which tax? This GST tax on outputs, that is sales. The goods or services, whatever that person sells, is liable to pay tax on that such services or such sales. At the same time, he or he or his business is entitled to get ITC. What is ITC? ITC is input tax credit. There is a separate topic, we can say, it is a big topic to be discussed in this series, ITC. So it is entitled, he is entitled to get ITC on the tax paid on the input of purchases. It means whatever goods he purchased for the business, the tax paid on such goods, that is the GST paid to the supplier on such purchases, that amount will be available on for as a input tax credit. It means it will get deducted while paying GST, while paying all the GST amounts to the government. So in simple words, if the person is selling, just I will show as an example, goods purchased rupees 10,000 at the rate GST 18%. Okay, so the goods purchased. So while purchasing, input tax paid was how much it is on 10,000, 18% GST, that is 1,800, right? Okay. So goods, the same goods sold. Suppose we are the trader. We buy goods and we sell goods. So these goods sold for 15,000 and at the rate GST on the same product will be same. It is one nation, one tax, 18%. So output tax collected will be on 15,000 at the rate of 18%. So it will be 2,700. Now, the statement says that every taxable person is liable to pay tax on output sales. So the goods sold, that is output sales, is 15,000. Tax collected on that is 2,700. It means the person or the business needs to deposit this 2,700 to the government as a output tax. But before depositing this tax, he can entitled to get ITC, input tax credit, on the taxes paid on inputs. Means before paying this 2,700 to the government, the taxable person can take the credit of this 1,800 because he already paid 1,800 to the supplier, and the supplier have already paid this to the government as a GST. So 2,700 minus 1,800 will, that is 900, will be paid to the government as a GST by the supplier. Why? Because GST allows to take ITC, input tax credit, for the goods purchased, for the tax paid on the goods those were purchased. So we purchased goods of 10,000 rupees and paid 1,800 as a tax. Now the same goods we sold for 15,000 with profit and all, and GST was charged as a 18% again. So total amount of tax collected from our customer is 2,700, out of which we will deduct 1,800, that is we will entitled to get, we will get ITC of 1,800, and the difference amount as a 900 we will pay to the government as a GST. So this is what the sentence means. Under GST, every taxable person is liable to pay tax on the output tax and is entitled to get ITC, input tax credit, on the taxes paid on all the purchases or inputs. So final consumer bears the risk of tax. The meaning of this is, suppose this is business one and this is business two, right? The first business one sold goods to us, we purchased the goods and we sold goods to the consumer. So consumer paid us how much rupees? 15,000 plus that 2,700. Now, this consumer actually consumes the goods. He do not sell these goods to next person. So the goods consumed by the consumer, so he will not get, as he is not selling the goods, he will not collect the tax and he will not get ITC. So final burden of the tax, that is total 2700, is on the consumer. So final consumer bears the risk of tax. The last consumer, the person who used that product, bears the risk of tax. Now, next part is component of GST. What are the components of GST? As we see, there are four components of GST: CGST, SGST, IGST, UTGST. The full form of CGST is Central Goods and Service Tax, Central GST. SGST is State GST. IGST means Integrated GST, while UTGST is Union Territory GST. So let's have brief discussion on all these components of GST. CGST, that is Central GST, is levied and collected by the central government. So C stands for central. So central government collects CGST. SGST, in that S stands for state. State GST is levied and collected by the state government. Now, CGST and SGST percentage are equal. Now, with the same example, I will explain the things. I will erase these things. Now, the question is goods purchased or sold, whatever, of 10,000 rupees at the rate of GST 18%. Suppose these goods were purchased or sold within the state of Maharashtra. Within the state, the purchaser, that is, sorry, the supplier is from Maharashtra and the purchaser is from Maharashtra. In that case, the goods costing rupees 10,000 will have 18% GST, out of which CGST will be 9% and SGST will be 9%. So total 18% will be calculated on 10,000 rupees, out of which 9%, that is 900, will go to central government and 900 will go to state government as a tax collected by the government. So CGST and SGST percentage are equal. So if any product has GST rate as 18%, in that case central government will receive 9%, SGST, that is state government, will receive 9% on sale of such products or service. So CGST and SGST are charged for supply of goods or services within the state, that is intrastate. Here I have given the example of goods supplied or purchased, sold, whatever, within the Maharashtra, state of Maharashtra. That is, supplier is from Maharashtra, purchaser is from the Maharashtra. So if the goods are, the transaction is between the single state or intrastate, we can use CGST, SGST. Now, IGST. IGST is integrated GST collected by the central government. So it is integrated GST, which is collected, the whole amount of tax will go to central government. So IGST is charged for the supply of goods or services between the state. Interstate means, suppose the supplier is from Maharashtra and purchaser or customer is from Karnataka. In that case, instead of calculating CGST, SGST, the whole amount will be calculated as IGST, and IGST on that product will be again 18%. IGST 18%. The whole amount will go to central government, and after the calculation, that central government will give half of the amount to that particular state, Maharashtra or Karnataka, whatever. So in which the state in which the supplier produces this sales bill, that state will get that amount of GST. But it will be after it will get that that state will get this amount after some time. But for the seller or the supplier, he needs to provide IGST on this bill, and the whole amount will go to central government. So IGST is inter integrated GST collected by the central government, and IGST charged for the supply of goods and services between the state, that is interstate sales purchases. And the last one is UTGST. It is leveled on intra-union territory supply of goods and services. It means just like SGST. SGST is state GST. UTGST is union territory. There are few union territories in our India. So goods, the transactions so or the goods sold within that Indian territory, the GST will be charged as CGST and UTGST. Now let's know the GST benefits to different parties. First of all, benefits to the business. The mitigation of cascading effects, that is reduces the effects of tax and tax. Before GST, there were number of taxes which were charged on sales of goods and services. Even there were different taxes, and the tax amount was calculated as a tax on tax. So it was there was different taxes, and that amount of the products get increased because the tax was charged on tax also. So mitigation of cascading effects gets nullified. It has reduced the effect of tax and tax. Common national market. As GST is one nation one tax, the GST rate on a product will be same all over India. So it has developed a common national market for the businesses. Reduction in the multiplicity of the taxes. There were different taxes before GST which were charged on goods and services, but now there is only single tax, that is GST. It has merged several taxes, and we at present these days we charge only GST on goods supplied or services provided. Reduce the cost of compliances. Before GST, there were different taxes, so the business has to take care of all the compliance dates, filing the returns of all types of taxes. But now they can concentrate on their business, as there is a reduced cost of compliances. They need to just look out the GST dates. They need to meet the GST compliances only, not other compliances were available now. For there are no other restrictions or other compliances. Improved competition resulting quality production. So obvious, the goods or the tax get reduced, the cost of goods got reduced, and the business can now more concentrate on the production or the quality of the product. Improved competition has been resulted, and this has resulted into quality production. So these are the GST benefits for the businesses or the traders or manufacturers. Now, GST benefits to the consumers. Again, the same thing: reduced cost of goods and services due to elimination of cascading effect. The tax on tax get reduced. It has nullified the effects of tax on tax. There is only single one nation one tax, single tax. This has resulted into reduced cost of goods or services. Transparent and single tax. It is easy for the consumer to know what type of tax is charged, what is the rate of tax, and very simple calculation is available now. GST is very simple, it is very transparent, and a single tax which is there in the bill. So consumer can easily understand the value of the product, the cost of the product, and the tax paid on that product. Increase saving, investment, and purchasing power. Obviously, as the goods cost got reduced, the consumer is getting quality products at reduced rate. The amount saved has increased. Saving, that save the remaining amount can be used for saving, investment, or the person can buy new other things. So it has increased the purchasing power of the consumers also. So these are the benefits for the consumers. And for the government, benefits to government: better control over the fraud and leakages. See, few minutes ago we discussed about ITC. We discussed about ITC. ITC is input tax credit. To enjoy the input tax credit, it is mandatory to have that whatever the inputs or purchases be made, that all the bills needs to be uploaded by the supplier on GST portal. So the if any supplier is uploading all the invoices in the GST portal, only that case all the purchases made by his or his customer can go for ITC. The meaning of this: all the taxpayers needs to upload all their invoices to GST portal. So leakage, frauds has been nullified, or they were reduced now as compared to earlier days. Simple and easy administration. It becomes easier for the government to administer GST instead of administrating number of taxes. Increased revenue efficiency. Again, all the suppliers and suppliers ask their supply all the suppliers ask their suppliers to upload GST invoices on the portal. So obvious, as GST invoice is uploaded, government has surety to have that GST amount to be submitted, or GST amount get submitted or deposited into government banks. So increased revenue efficiency for the government. Reduced administration, as most of the taxes merge into single GST. So again, government can administrator or can have a better control over the GST. There several amendments were taken place from 1st of July 2017. Even the products GST rates which was charged earlier, that is as in the starting period of the GST, that is 1st July 2017, that rate also get reduced due to leakages and fraud have controlled now. So overall it has resulted into reduced cost of goods. The next part is tax invoice. Tax invoice is issued by the registered taxpayer, registered taxable person. So whenever we purchase or sell the goods, it is necessary to in, issue invoice, and that invoice should be a tax invoice, and this tax invoice will be issued by who? By the registered taxable person, means the person who has registered his business in GST portal. So it is issued at the time of supply. Tax invoice is issued at the time of supply. Whenever goods are issued or whenever the advance money is received, whichever is earlier, it is considered as a time of supply, and that tax invoice issued at that time. So tax invoice is issued at the time of supply. Tax invoice include description, quantity, rate, value of goods, tax charge thereon. All these things has to be there in tax invoice. So how many goods or quantity sold, rate per quantity, value of the goods, total value of the goods, and the tax charge on. Description means what type of product it is. All these things has to be there in the tax invoice. Along with this, it also includes the GST number of both supplier and the purchaser. So that we will come to know whether it is intra-state purchase or interstate purchase sales. So the tax invoice is very important, and it should include all these things. That is GST number of both the parties and description, quantity, rate, value of goods, taxable charges, and there all these things. Even in Tally, we issues tax invoices. We can create tax invoices which can be uploaded to GST portal directly. Now GST registration. As of now, we said ki we discussed the taxable person. But when this person becomes taxable, when this business becomes taxable, or GST registration needs to be taken at what time, that we will discuss now. GST registration. GST is charged on supply of goods and services. It is payable by every taxable person. Now, the liability to pay GST arise when the turnover of the taxable person crosses the threshold limit. So, whenever the sales or turnover of the person crosses the threshold limit, this threshold limits gets amended every now and then, every time. So, what is the amended rules that we can check, that we can Google for this? So, liability to pay GST arise when the turnover of the taxable person crosses the threshold limit. The threshold limit at present is 40 lakhs. In some state, it is 20 lakh, and in other state, it is 40 lakhs. So, it also gets amended from time to time. So, this threshold limits gets amended. For latest rules, we need to we need to check GST portal. So whenever this turnover get crossed, that business or the person, owner of the business, needs to go for GST registration, and it is compulsory to register within the stipulated time, which is 30 days from the date on which the person becomes liable to register. So it is very compulsory, very mandatory for the business to get GST registration within 30 days. The stipulated time is 30 days. It again gets amended from time to time. So within 30 days from which the person becomes liable, that is the turnover crosses the threshold limit. Now GST registration number. GST registration number is a alphanumeric in nature. You will find numbers as well as letters in that, letters in that. It is of 15 digit and has 5 parts, 5 elements. First 2 digits has a state code. The state code for Maharashtra is 27, for Karnataka it is 29, for Goa is 30. So first 2 digits indicates the state in which the GST registration is taken, or the supply of the goods is from which state, can be understood with this first 2 codes. Then next 10 digits are the PAN number of the person, owner, or the business. So next 10 digits are of PAN number. Then entity code, it is 1 digit. It is given by the government. And alphabet, next character is Z, which is default. It is an alphabet by default. It is single character, Z is there. And last one is a check digit 1. It can be a number or it can be a letter, anything. So here are the examples. For 27 AAAAP O267 H2ZN. So starting with 27 means this is the GST number from Maharashtra. This number is starting from 29. It is from Karnataka. This is 30. So it is of Goa. So you can visit GST portal to know what is the state code for your particular state. Next is GST registration schemes. As we know, the GST registration has to be taken from the 30 days of the date on which the person becomes liable for registration. So there are different schemes available for GST registration. Every supplier of goods and services is required to obtain GST registration where in the state or union territory from where he makes the taxable supply. So the state from where the goods or services are sold, the person needs to take GST number from that particular state or union territory. And when it should be taken, if the aggregate turnover exceeds specified threshold limit in a financial year, which is 20 lakhs or 40 lakhs. In few state, it is 40 lakhs. He must get registered within 30 days from the date on which the person becomes liable to register. So again, the dates are 30 days available to get registered with GST. Now, the GST registration schemes. There are two GST registration schemes are available. First is regular dealer and composite dealer. We will discuss on these two. Regular dealers, regular GST dealers. The threshold limit to get registered as a regular dealer is if the turnover crosses 20 or 40 lakhs, depending on the state and the nature of the business. This is we have already discussed. So if the turnover crosses 20 lakhs or 40 lakhs, depending on the state and the nature, again go for GST portal to have the amended rules. The taxpayer registered under the regular GST are required to pay taxes on monthly basis. This is very important. The regular taxpayers, regular GST dealers pay taxes on monthly basis and file returns on quarterly basis for those whose turnover is up to 5 crores. Return can be filed on quarterly basis provided turnover is 5 crore. And if the turnover is above that 5 crore, that business needs to file returns on monthly basis. So there are two parts: paying the taxes and filing the returns. Paying the taxes means actual amount to be submitted to the government, and filing the taxes means filing the return means providing all the details of outward sales as well as inward sale purchases. The list of all the invoices, that is sales invoices as well as goods purchase invoices, is known as the file returns. Next, about regular GST taxpayers. These taxpayers can deal in intra as well as interstate sales. Means if GST registration is of regular type, then the person can sell goods within the state, within the union territory as well as within India, outside the state also, that is interstate or as well as intrastate. Even they can sell or export the products to sales. They can sell or export their products or services. What is SEZ? SEZ is sales, special economic zone. There are many special economic zones in India where the sold, goods or services sold in these areas to these areas are considered as exports. So regular dealers can sell to sale or they can export their goods and services. Regular dealers are allowed to collect GST from the customers. They can have their own tax invoice where they can charge GST, that is outward taxes, and they can claim for input credit. ITC can be claimed by regular dealers. It is compulsory for them to issue tax invoices. Regular GST dealers must issue tax invoice for the goods sold or services provided. Now about the composite dealers. Taxpayer with aggregate turnover in a financial year up to 1.5 crores shall be eligible for composition schemes. If the goods sold, the turnover of such goods sold in a financial year crosses 1.5 crores, then the business can go for composite scheme, composition scheme. And if the person is providing services, in that case, the that threshold limit is 50 lakhs. So 50 lakhs for services, 1.5 crore for the products. If the turnover gets crossed to this extent, the person go for composition scheme. Few businesses are eligible for composition scheme. Now, the scheme is available for only for few businesses, not for all the businesses. For example, food and vegetable vendors, saloon, tailor, artists, shopkeepers like this, or grocer shop, all these things they can go for composition scheme. Why they can go for composition scheme? We'll come to know with this point. Can do only intrastate. This composition scheme allows selling within the state only. Interstate, that is outside the state, are not allowed for such composition dealers. Cannot make sales or export. Again, they cannot sell their products in special economic zone, or even they cannot export their products. So if you want to export the product, it is better to go for regular scheme. Composite dealers cannot claim for ITC. They cannot claim for the input tax credit. The goods they have purchased, the tax paid on such purchases cannot be adjusted with the output tax. They cannot claim for this ITC. Bill of supply is issued by such businesses. Instead of issuing tax invoice, they issue bill of supply. They submit and pay GST on quarterly basis. So GST paid by such dealers is on quarterly basis. Regular dealers pay monthly basis. Composite dealers pay on quarterly basis. GST is not collected from the customer, but it is paid from the pocket of the dealer. So GST is not collected by the customer. See, when we go to saloon, tailor, they do not charge us GST on the services they provide. Or when we go to vegetable vendor, food vendor, we never ask, or they never ask to pay GST on the foods. So it means GST is not collected from the customer, but it is paid from the pocket of that dealer. They have limited tax liability as taxes are charged at lower rate. And for such composition scheme, the tax that is outwards, whatever the turnover is there, on that turnover, GST or the tax is calculated, and the rate for such taxes is very, very low. So this is composition scheme, but this is not available for all the dealers. It is only available for few dealers or few businesses like food, vegetable vendors, saloon, tailor, artist, shopkeeper, etc. So these are the basic things related to GST. Still, there are few things to be understood, like time of supply, payment of GST, what is ITC. All these things we will learn in the next part. So go through the PPT. Also solve the questionnaire so that it will help you to understand this topic, and which will make you to have good control on GST in time. So let's stop over here. Thank you.